All right, we're starting off the 5-minute stream countdown timer. So at about 9:08 p.m., we will get this thing going. All right, we got about 2.5 minutes before we fully go live here. We're going to give everyone a sec to join up. If you guys are here, let me hear something from you in the chat. Appreciate everyone who's already joined on with us tonight. J Marts, what's going on, man? Always happy to hear from you. All right, we got about 2.5 minutes before we fully go live here. We're going to give everyone a sec to join up. If you guys are here, let me hear something from you in the chat. Appreciate everyone who's already joined on with us tonight. J Marts, what's going on, man? Always happy to hear from you. All right, we got about 2.5 minutes before we fully go live here. We're going to give everyone a sec to join up. If you guys are here, let me hear something from you in the chat. Appreciate everyone who's already joined on with us tonight. J Marts, what's going on, man? Always happy to hear from you. All right, we got about 2.5
More for happy to see you on the Twitch chat. Welcome, welcome, welcome. One of our
most notable members of our Discord server, I guess I could say.
And shout out to C4 Turtle in the YouTube chat. Always happy to see we got people on Twitch, we got people on YouTube. I don't care how you tune in, but as long as you're able to join in with us tonight as we talk about our trade ideas.
Chat. Welcome,
Always
welcome,
happy
welcome.
to see you guys joining
One
in.
of our most notable members of our Discord server, I guess I could say.
And shout out to C4 Turtle in the YouTube chat. Always happy to see we got people on Twitch, we got people on YouTube. I don't care how you tune in, but as long as you're able to join in with us tonight as we talk about our trade ideas.
Chat. Welcome,
Always
welcome,
happy to
welcome.
see you guys joining
One
in.
of our most notable members of our Discord server, I guess I could say.
All right, we got about 30 more seconds to
Shout out
go,
to
and then we
C4
are going to
Turtle
get
in the
things
YouTube
going.
chat.
Always happy to see we got people on Twitch, we got people on YouTube. I don't care how you tune in, but as long as you're able to join in with us tonight as we talk about our trade ideas.
Chat. Welcome,
Always
welcome,
happy to
welcome.
see you guys joining
One
in.
of our most notable members of our Discord server, I guess I could say.
All right, we got about 30 more seconds
Shout
to
out
go,
to
and then we
C4
are going to
Turtle
get
in the
things
YouTube
going.
chat. Always happy to see we got people on Twitch, we got people on YouTube. I don't care how you tune in, but as long as you're able to join in with us tonight as we talk about our trade ideas. Chat. Welcome,
Always
welcome,
happy to
welcome.
see you guys joining
One
in.
of our All right, that is the bell, and that means it is time for us to get started. Let me X out of this notification. And once again, thank you to everyone who's tuned in tonight. We are excited to get going again with our weekly trade ideas. We've had some awesome trades over the past couple weeks. I could, spoiler alert a bit, flip ahead to how we've done recently, but 2 weeks ago we made $14,000 in a week. Last week we made about $8,000. And this week, hopefully, the week of May 2nd, we can throw together a little bit more. Scrolling down here to our performance against the S&P 500, which is the single most important thing that we do because, it's always fun to make money and have these big weeks, but at the end of the day, our main goal is to be beating the market, and we benchmark that by looking at the S&P 500 returns via the SPY. And over the last couple of weeks, we have exploded up to near our 50% return overall on the year, which is crushing the S&P 500 index, which is sitting right around 11 or 12% right now. So flipping back over, the first thing we're going to do tonight as we mark this to is we are going to do a little bit of a recap of what we had going last week. And then we will get into what we've got for next week, talk about some of the ideas behind those trades, and as always, hopefully turn to the chat and get some ideas for some other stocks that we can take a look at. If anyone has questions about the strategies that we run, happy to explain anything like that as well, but let's jump into it. So as we mentioned last week, we've started throwing in column A here. Classification about what and as always, hopefully turn to the chat. We got a message saying there's a crazy echo. If anyone else can hear the echo, let me know. Has questions about the strategies that we run. I can tell you exactly why I think as well, but let's jump into it. Okay, let me know if the echo's gone. I think I had both my desktop mic and my additional microphone going. If that fixed it, let me know, and then hopefully we can get into it. We got a couple more messages. It's on like a 15 to 20 second delay, so me fixing it, hopefully me fixing it and you guys hearing that it's fixed. Hopefully there's a little bit of a disconnect there, but all good now. Awesome. That was my bad, technical issue, but I'm glad we got that figured out now. So here we go. As I was about to start talking about on column A out here, we've started classifying our plays based on, how risky or not risky we think that they are. We've got a bunch of safer plays labeled in green, things like UWMC, things like ICLN, which is an ETF. And then we have some bigger names, Etsy, AMD, Zillow, and Open Doors, some bigger stocks that I've filed under safer plays. And while some of the stocks themselves may be, a little bit more volatile, they're definitely a lot safer than something like an STON, NNDM, RMO. So that's the idea behind that. And then lately, we've been trying our best to cycle into more of these safer plays because as we can see when we look at this HT Wheel Performance tab, let me scroll down. We had a great run since we started tracking every individual trade for the HT Wheel back in November. We had a profit on our first, 25. It took the 26th trade before we found a loser on that one. But if you look at our stock returns out to the right here, you'll notice they're terrible. So the stocks that we're picking, they just need to get better. We've got things like SNDL, TRX, OPTT, VISL, LODE. No part of these are solid fundamental stocks that you could expect to move up in the long term. We strictly were chasing premium, and while sometimes it did work, for example, LODE, that one worked out awesomely for us. And as you can see in general, we've got 54 wins compared to 3 losses. So in general, we've got a pretty dang good win rate. So despite the fact that our stock picking is terrible, the goal here is to make this a little less stressful on us so we don't have to, take these 20 or 30% drops over the course of a week and find ourselves clawing back from an initial loss as opposed to just getting our profit week one, starting over, selling more puts over and over and over again. And that's what we've tried to do. You can see some of the tickers that are popping up here that we've been playing lately. We've got Etsy, AMD, we're doing Etsy again, Zillow, Twitter, OCGN. That one admittedly was a little bit of some premium chasing there, but we went far enough out of the money to where we would need greater than a 50% drop for that one to lose money. So we're fine with that from a risk perspective. But that is the general trend of what we're trying to do here going forward, because one thing that we think is awesome that, might not be available to everyone, so we want to keep that in mind and talk about trade ideas that apply to everyone. But this idea of, using the margin that our broker grants us in order to take some of these larger stocks where the ROR, the return on risk percentage, is pretty low, and then evaluate it on a return on capital perspective. And what that means is, hey, if we wanted to sell these AMD puts fully cash secured. I forgot exactly how many. I think we sold about 4 of them, right? We sold them in 80 strikes, so it would take $8,000 per put that we sold. So it would honestly take about 35 grand for this row right here, which would be 35 grand in the collateral tab, which isn't that great of a return if you get $295 off it. But the idea that we've been using lately behind this idea of using the broker's margin that they're extending to us is that, TD Ameritrade now only requires 8,200 to sell these puts. They want 8,200 of collateral since AMD is a less risky stock as opposed to the $32,000 that it would take if we sold these puts fully cash secured. So the idea there is that 295 divided by 8,220 is a lot better of a return than that same 295 divided by a similar stock where we would have needed it to be fully cash secured. I think it would have been under 1%. So we're using a little bit of leverage. And, I use that term leverage. It's kind of a scary term, but we're using a little bit of that leverage in order to get some better returns on capital or collateral that we're putting forward. And that's why we're playing. That's the benefit, I guess, of playing some of these safer stocks. Now, if you're not comfortable with leverage, that is perfectly fine. Everything we do in here, I think we've got plays of all different sizes. We try to cater to all different account sizes. So there'll definitely be something for you, but, maybe you could just ignore when we're talking about putting $2,000 or $3,000 down per contract that we sell. Nothing wrong if you can't afford that. I would also encourage you, if that's a little more buying power than you're comfortable with putting forward, then absolutely don't do that. I think the single most important thing that we can do here is invest amounts of money that we're comfortable with and put ourselves, since these are positions where we have defined risks and defined losses, put ourselves in a position where that defined loss is something we're okay with taking and isn't going to blow up our account or put us personally in a terrible financial position. So keep that in mind when we talk about leverage. We don't use leverage to jack up our entire account and have $10,000 worth of collateral on a position that is the equivalent of $250,000. So we don't get that crazy with leverage, but I think this 2 or 3 or 4 times leverage here that we see is a really solid trade-off, especially when considering how steady some of these other stocks are when compared to some of the other names that we'd previously been playing. But that's my little rant about how we've been using leverage and why you're starting to see some of these names and why we'll probably start to shift a little bit more to some of these names going forward. But at the same time, we're always going to have stuff like this in our portfolio because, as we know, our biggest advantage when we sell options is that amount of premium that we get. And if we're collecting a lot of premium, we get a bigger advantage. So there's always going to be these fun things. I think ideally my split between my account would maybe be, 40% safer plays, 40% premium chasing, 10% hedge, and then keeping a little bit of cash on the side for if any of our positions go south. So that's, I guess, the mentality that I'm taking from this point forward. I think we've learned a lot so far. I mean, we're always learning. It's always great to be learning lessons in the market every single week that you trade. But having a return chart that looks like an EKG is a little bit what we're trying to get away from going forward here. We don't want, well, we love the big rises, which we still can potentially put ourselves in play for. The big drops are really what we're trying to avoid, especially now that we've developed such a nice lead over the S&P 500 moving into May. So, we're only a third of the way through the year. We've made 50%. We definitely want to put ourselves in a position where, a bad stretch of weeks isn't going to take us down back to where the S&P 500 is. At this point, it would be embarrassing, quite frankly, for us not to beat the market based off how well that we've done over the first 4 months of the year. So that is why we'll start potentially adjusting some of our strategy moving forward and try to smooth out this curve that you're seeing right here. So finally looping back around to what I wanted to talk about when we started off, is giving an example, giving a run through of what we had last week, and then we'll go through what we got next week. And then we did have J March shouting out MT or ZIM in the chat, so appreciate you throwing those in. We'll happily take a look at those a little bit later in the stream. I'll throw them on my list, and we will keep the train moving. So first up, UWMC, if you guys have been following us, this is one that I'm sure you guys are very, very familiar with because, as you can see in our HT Wheel performance, if we scroll all the way back to the top here, this is the one lone yellow highlighted cell that we've got of plays that we opened in 2020 that we still have open now. Now, typically when you have a play open this long, it's because it's a loser. And while, thanks to the amount of premium that this opportunity gave us, the strategies that we're running, we've got a really solid return on this trade itself. But if you highlight the entire row, you'll see during the duration of the trade that we've been in, the stock has dropped 25%. And then again, that's just a testament to how effective these option selling strategies that we run are. We've got a stock that dropped 25% on us, yet we're still pulling a 15.82% return, albeit that took 23 weeks, and this is really dragging up our average length of trade here, because I don't think we've even got anything. Got a 14, an 11, a 13, but definitely nothing close to a 23. But we're perfectly happy to keep this one going. If we pop over to that breakout tab, you'll see we just have row on row on row of different adjustments and legs that we've added onto this play. We've gotten our break-even price down to $6.45 after we started at 1084. So I think that's an awesome place for us to be at. And the plan is just to keep selling these 9 puts and 9 calls until eventually our shares are called away at $9 a share, which means UWMC is above 9. And that would consequently mean that our cash secured puts that we sold are above 9. So we'll hit max profit on those and get our shares called away. And that is how I envision the eventual conclusion of this trade. So moving a little bit further down the list, we got PSTH. That's one we've talked about also to death because we've had this one going for a similarly long amount of time. I think 12 or 13 weeks is how long we've been sitting on this one. But one of those things where there's decent premium. We sold 24 puts this week. We got a little bit more bullish because the idea with PSTH is that it's one of these SPACs. They still haven't announced a target, but the net asset value, which in theory should be the short-term price floor of the stock, is in the low 20s as opposed to most other SPACs where it's right around $10 a share. So anytime that PSTH dips a little bit lower in the 23, 24 range, we know before there's a deal announcement and merger, there's not much more near-term downside. So what we do is increase our position a little bit by selling some cash secured puts, a bullish position, and it worked out really well for us last week as those expired worthless. We've also got 26 calls that we're going to roll into next week. We didn't actually end up doing that at the end of last week. That one kind of slipped our mind as we got a little bit busy with actual work at the end of last week, but we got all of our main plays flipped over, so that was all I care about. Moving down, ICLN, this is one that's, maybe the single most boring play I have in my entire portfolio. We could pop over to that trade breakout tab as well and talk about that. ICLN started off when it was at 27.10. The stock dropped 14%, which is a common theme, which unfortunately is, we envisioned ICLN as being one of these safer stocks since it's a clean energy ETF. And in a sense it is compared to some of these other ones where we've had these insane decreases in the stock price. But we've got our break-even price at $24.61. We're going to keep selling these 25 calls, take 10 to 15 cents off every single week, and hopefully one day it pops back up to 25 and we'll be out of this trade with a gain. But I don't know when that'll be. Hopefully it's sometime soon, but perfectly happy just to keep running these covered calls until our shares are called away for a gain on that one. So super, super boring play because honestly, not too much happens with this one, but one of those where we're comfortable that, hey, eventually it's going to turn out okay. It's one that I'm perfectly fine being in long term. So we just bury that in the bottom of our portfolio, keep selling calls week after week, and move on to our other plays. STON is an awesome one because this is one we were fully prepared to take a loss on. Let me open up Thinkorswim really quickly, and then we could get looking at some of these charts to kind of illustrate these points I'm talking to when we discuss the timeline of these trades that we've been on. So STON was one. While this is loading, I'll kind of walk you through where I think the prices were, but it was trading at about 280, 270, and that was after falling down to about 5 share. So there was a ton of volatility in shares. It looked like there was some relatively decent support around the level. So what we did is we sold, and I could go to the actual trade breakout tab here. Give me 1 second. There it is, STON. Yeah, so we entered STON at 270. We sold 2.5 strike calls for 60 cents, which means our break-even price was going to be that 270 for the shares minus the 60 cents of premium, so $2.10. And we thought that was awesome because, hey, if this stays flat, they'll get called away for 250 a share on something that we have a 210 basis. So we'll get almost a 20% return if this thing just stays flat. But, as is kind of, some of the luck dropped a lot. I think at the lowest point, it got near about $1.70. We're coming up on our April expiry. We were fully prepared to close the trade out. But funny enough, it completely spiked back up to about I think slightly over $2. on April 16th, right when we were about to exit the trade. So that put some premium into the May series of calls. So we were perfectly happy to roll ahead and keep selling next month, which dropped our break-even price 16 cents further. So we now have a 194 break-even price on something where we could potentially have it called away for 2.5. And as you can see up here by the current price that we've got, STON is now up to 246. So it's closing in quickly on this max profit level at 250. And if it stays exactly where it is between now and May 21st, and I know 3 weeks is a long time to wait, we always are itching waiting for these monthly option expiries. But if it holds where it is, we're going to get a 24.76% return on capital invested on a stock that decreased just under 10%. So one of these things where our strategy is bullish, the stock did go down, but the premiums and the opportunity that we were able to identify here put us in a situation where we are going to be looking at a really nice return potentially if things just hang tight where they are. And again, it could drop all the way down to 194 and we would not lose a single penny on that trade. So moving further down the list, again, that's one we're super pleased with, the pleasant surprise. The next one that we had last week was NNDM. That's one we got in at about the 660 level. I want to say our break even is just above $6 a share, and we sold 7.5 strike calls. Tons of premium still left on these. This is all going to dry up if NNDM finishes above. Well, it's all going to dry up, period. It effectively all it does is cap our gains on the share at 750. But that's okay because we're perfectly happy with collecting another, I think, $1,500 on this one just from the premium off these calls. So we're going to let that one ride until May 21st. RMO is one we got in decently heavy on by virtue of it dropping very quickly against us. So we just continued on with the strategy and did what we were supposed to do when stocks moved down, and that was conservatively averaged down by selling cash secured puts. And we got ourselves in a position where I think we're now above our break-even price on the overall trade. And again, we could go over to this trade breakout tab and fully walk you through. Yeah, we got in at 11.34 a share, sold covered calls back on March 23rd. I think dropped like a rock. It has since dropped 24%, which again, I feel circles back to this conversation that we were having about break-even prices. Excuse me, not break-even prices, but the conversation we were having about stock picking, where we need to do a better job, maybe not chasing the tons of premium that we saw at the 1250 level because there's too much downside risk in the short term, but maybe being a little more patient on these premium chasing opportunities. But nevertheless, walking through what our break-even price was. Again, we started the trade when RMO was at 11.34. Right off the bat, getting 66 cents for those calls. Our break-even price was 10.68. 2 days later, it dropped further, so we sold some 10-strike puts. That dropped it down to 9.72, and upon expiry, when we rolled all of our positions forward, we got more premium for the 10-strike calls for May. We sold more puts for May, and that got our break-even price down to $8.23, which is currently below the price of the stock, which is what we love to see. So if things, again, another common thing, if a common theme is if things just hang tight right where they are, RMO stays at 861, we're going to pull a 7.917% return on capital on this trade, which is phenomenal on a bullish position on a stock that dropped 24% against us. So, it's a love-hate relationship with with premium chasing, because while sometimes you'll run into positions like this where it drops really rapidly, a lot of the time you'll be in a position like this where your break-even price is super low and you could still pull a really nice return despite a stock moving against you. So let's get back to the back end of the list that we had right here. Etsy was a great one. Well, it was a great one for a second. This is where we could start up some charts, talk you through this one. We sold weeklies on this one, waiting for I feel longer for is because I feel like I was staring at my phone every 5 minutes trying to figure out, what's Etsy's price, when we know it's really not relevant until expiry. But what happened on this one? Let's start with the 5-day chart that we've got over here. We had Etsy right after this dip. You could see right here, I think there was an analyst report that put either a hold or a sell rating on Etsy, so it dips pretty nicely. And typically, if the stock isn't too terrible, someone downgrades from buy to neutral, you're going to dip like this. But that usually provides a pretty decent entry point. So we got in right around here at about 205. Sold those 205 strike puts again, which just meant, hey, if this thing stays flat, and we got $5 of premium for them. So really, if this thing just stays above 200, we're going to make money on it. So we watched throughout the week. Thursday before the market opened, things were looking awesome because it was at 214, and I really didn't think we were going to have to worry too much about this. But as is typical with a lot of these plays that we play right down to the wire, things can change pretty quickly. We know our max profit level was at 205, which we opened above on Friday, and our break-even price was at 200. But after this initial drop that you could see right here, we got a little bit spooked and said, hey, you know what? We're going to close these out and just lock in a profit right here. And it turns out that that was a pretty good move. I think it saved us about $500 because this thing finished the day just south of $200 a share. So we're perfectly happy with that one. I think we did a good job with that. A similar story with AMD. We had 83 strike puts that were expiring as well as part of our pack trades where we're trying to move a little more into these safer stocks. I think this kind of fits the bill. But we had an 83 strike puts. Friday market opened. It jumped up to 84. We said, okay, we might be looking at max profit. But similar story with Etsy. It started dropping. It got right near 83 is when we closed these things out and said, hey, if the market keeps dropping too much, I don't want to turn this into a losing position. So perfectly happy to get out of this one and pull a $295 profit. Not a huge position, but again, a really short, I think, 3-day trade that we had on that. We opened it Wednesday after they dipped post earnings. But we're happy with where we sat on that. We will probably be looking to play AMD again at some point in the future because I think backing up to the 180-day chart, I really like the entry point for the most part over the last half year. It's traded between the 75 and 100 almost level. Anywhere around 80, I think, is a great price for a stock like this. Demand is still high. It's a solid company. And the up and down motion that you could see on the chart that we've got up right here, premium on a week-to-week basis is pretty solid. So this is one we're happy with. If we wanted to sell one for next week, 1.62% ROR, which isn't a big number, but if we consider return on capital, it turns into a very nice number of 8.14%. And again, return on capital is this idea of instead of it being fully cash secured, which is what return on risk puts forth when calculating the return on capital, instead your denominator in that equation is the amount of collateral it requires. And thanks to looser margin requirements with safer stocks like this, we're able to use that leverage to generate better percentage returns on the capital or collateral that we put forth on trades. So these are some really attractive numbers at great prices that I'd be perfectly happy to either potentially get assigned on or continue to roll those puts on a week-to-week basis. So that was one. Happy to lock in profit. It could have gotten worse. Zillow was one where we thought we had a max profit in the bag. And it is really, really upsetting that we had to take profit because sometimes on the day of expiration, that difference between 50 and 100% is a decent number dollars-wise. And I think going back to the tracker that we had going, we sold, 8 of these? And so we essentially missed out on about $850 here by not getting max profit. But at the time on Friday kind of spooked me out a bit. So perfectly happy to, cut our ties with the stock right around here when it was trading at our max profit level, lock in a profit of, $800 on the trade, which on a weekly basis is phenomenal. And we were comfortable doing that. You might say, well, why did you, theta decay is normally really, really quick on the back end of Friday. And you'd be right. You might be asking, hey, why did you get rid of Etsy? Why did you get rid of Zillow right before expiry? Isn't it normally a good idea to hold on to those until expiry? And you'd be correct. But the reason we cut losses, or I shouldn't even say cut losses, the reason we cut the 430s that we sold is because, hey, we wanted to lock in a trade. And I knew because they're presenting earnings next week and the premium opportunity is phenomenal, jumping ahead here a little bit, I knew we were going to enter them again the following week. So perfectly happy to cut ties. And if, it ran back up to 134 by the end of the day and I say, oh, dang, I would have had max profit, that run up to 135 would have reflected positively on our returns for the puts that we sold in the following week. So one of those positions where give yourself a little bit more time, a little bit more of a cushion, and we sold Zillow 120 puts instead of 130, so a much, much bigger cushion. 120 isn't even on the chart here. It probably would be down below this RSI chart if we zoomed all the way out like that. But again, a much bigger cushion. That's because they've got earnings, and we'll get into that in a minute. But finishing up our discussion of how things happened this week,
Open Doors, another one that's just been phenomenal since we opened that play. We sold 17.5 puts, and I think this one is chilling above 20 bucks. Friday's market close. I'll give you the official answer in 2 seconds. Yeah, $20.27. Still a decent cushion above the 17.5 strike puts that we sold. So, yeah, I think we might close these out soon because that's not a ton of premium to collect, and I'd rather have that buying power free to move into something else. But that is that's the way that one shaped up last week. Really, really nice weekly profit. Happy with the way that one's turned out. UXIN is one where we sold a one-strike put, and this thing's, I think, above $2 a share. And again, we'll give you the official answer. UXIN is trading at $3. Okay, yeah, above $3. So when we sell a one-strike put, we know that, hey, as long as UXIN finishes above $1 a share, which I think it would take something pretty catastrophic to get it back below 1, we're going to make what's essentially, I think, a 5 or a 6% return. So you sell 100 of them, that's $500 for you at max profit off a very, very, very high percentage trade. And I think these UXIN, one strike covered calls, these cash secured puts that we've been selling to grab it, 4 or 5% over a short period of time is just about as close to free money as we've had in the market lately. OCGN, like we talked about, that's one where we sold a 5-strike put that was super far out of the money. It leveled off where it was, so the premium on that got slashed in half. We took our gains, took our capital, moved on. These SPX call spreads, that's the hedge that we've got running every week. These turned out just fine as it finished below that level on Friday. And I think I actually typed these in incorrectly because they were 423. Excuse me. No, that's what I had the next week. These expired below. These were last Wednesday expiry. Getting myself a little confused here. But these were last Wednesday's expiry. They finished below that. One of those situations where, hey, the great part about a call spread that we're opening, and to further illustrate this point, what we've got for this week is 423, the short leg on the call spread, which means as long as SPX stays below 4,230, we're going to hit max profit on that one. So let me illustrate to you on the chart what that looks like. Maybe was the computer's freezing up on me here. Yeah, May 5th was the we had on that. Computer's losing it on me. All right, can you guys still hear me? Let me know in the chat because my computer just absolutely freaked out. If you could see anything, let me know as well. But everything, as you might be able to tell, completely just collapsed right here on my screen. All right, can you guys see or hear me? Okay, awesome. We've got some confirmation from Morpho in the Twitch chat. Perfect, so we're going to keep it rolling. What I could see on my... Can't see anything. Okay. I don't think... Let's see. Voice, yes. So let me try to unplug my monitors and replug them back in. Bear with me. We got some technical malfunctions on the stream. As long as you guys can keep hearing me, I'm still here trying to figure this out. For some reason, the streaming software isn't picking up the fact that we've got another monitor in. But let me see if this fixes that. Let's see. Bear with me as I am going through all this. Yes, add another display. All right, we are gonna stop the stream and then restart the stream. Actually, you know what we're gonna do? We are just gonna stream off my smaller monitor. This should work.
There you go. You guys can probably see behind the scenes now of what we're looking at. This is how it looks. Let me know if you guys can see here. Hopefully you could see now, but we could get back into this. And then hopefully, I think bringing up SPX itself completely crashed whatever situation I had set up. Hopefully we could see now. Again, we're on a little 15-second, 20-second delay here, so a little bit of a disconnect between my questions and your answers, so bear with me. All right, we're gonna ask the chat. Can you see now? I think you guys should be able to. Perfect, good now, awesome. We are gonna keep it rolling with that little delay. Rounding out, we were talking about SPX. Let's get that back up here. Our short leg is 423. So up here at this price level, as long as the market stays below this by next Wednesday, we're going to hit max profit. And the great part about this trade is it's a hedge in the sense that, hey, if the market goes down, we're going to make money. But at the same time, we can hit this little middle ground right here where the market moves up. It carries all of our positions upwards, and we're still able to hit max profit on the spread and the positions, which is the best case scenario. I think small green weeks are the best for us because we'll hit max profit on the hedge, or we'll hit presumably profit on the long positions that we have. So that's what's happening right there. And again, we've sold 10 of these. They're 90 cents, so we've made 300 off them so far, and we'll collect another 900 bucks off those if it stays below that point on SPX that we talked about. Again, thank you guys for hanging in with me as I try to fiddle with my computer. Hopefully I get my main computer. Some of you already know this, but I'm on a little backup laptop that is safe to say does not have the best processing power in the world, as demonstrated live in front of an audience, so that was great. Flipping back to this CLOV, we've got 9 puts that we sold. These things, as long as it says we are good to go. Let's see. Okay, perfect. Let me flip back to our profit tracker. Okay, now we are good to go. I think we should be able to... Excuse me, this is our positions for next week. We're jumping ahead a bit. But yeah, so this should be a pretty quick discussion because a lot of what we have for this week was rolled forward from last week. We've got the UWMC shares. We got PSTH. We still have to cover those. ICLN, still got to cover those. LOTZ, the 7.5 strike puts. Do we have those up here? We did have those up here. We didn't really talk about those. But, as long as that thing stays above 750 and it's currently trading at, let's take a look. Currently trading at 758, so as long as it holds steady, one of my favorite things to do is using this tracker to see what we would make if it finished at max profit. So we'd be up, if it does the calculation for me, come on, you could do it, another 2,200 bucks basically if LOTZ just stays right where it is. And that is our favorite thing about this strategy, is as long as things stay right where they are, we got nothing to worry about. But moving down the list, STON talked about, and NDM we talked about, solid premium opportunity there still. RMO, we talked about that one. That's a little bit premium chasing, but we can continue to talk a little bit about Etsy earnings, the 180 strike put, and I think walking through the idea behind this trade is an interesting one because I was really excited when I saw that opportunity. Bear in mind, I did all this when it was at 205. I cut loose the last trade when it was at 205, and I opened this one when I was at 205, so the numbers were slightly different when I was evaluating this one. But one of those things where, hey, it's trading at 205 when I did it. They have earnings this week. What kind of cushion am I comfortable with giving myself? The first thing I like to do before earnings is backing it up to 180 day. Obviously, it's run up a bunch from 103 because it's one of those, COVID at-home stocks where their business might potentially be helped with what's been going on with all the lockdowns and such. So we have this run up here. It peaked at 250, so I think there's definitely some potential short-term upside. But on the downside, we look at this, I think about 189, as we can see right there, 190. We've got some more support maybe at the 172 level. So that tells me something in this 170 to 180 window would probably be a pretty good place to sell. And we know objectively, if Etsy drops 10% on earnings, that's $20. So it'll drop to 180. So if we sell a 180 strike put, we could basically handle a 10% drop on earnings, which is a huge miss and a huge drop in a stock on a week-to-week basis. But the great part about this is, one, Etsy's lowered margin requirements, and two, I'm gonna have to zoom out even further just to show you how far out of the money this one is. So it's going for $335 per contract. We'll call it $345 because that's halfway between the bid and the ask. But the great part about this is where normally you would need $18,000 to sell one of these. I could pull up the calculator to better illustrate this point if it'll let me. Here we go. Calc, come on, you could do it. There it is, it's right there. I'll just click it. Come on. Perfect. So originally, right, it was going to be 345 divided by the strike of 180. It would have been a 1.9, so basically a 2% return on risk, which, not bad for 1 week. However, when we look at this and we go to sell, let me expand this a little bit so you can see. If we want to sell one of these, the best part about this is that the cost or the buying power effect is $2,048. So what that means is that this takes $2,000 of collateral per 180 put that you sell. So now when we take a look at our calculator, and instead of dividing it by, 180, which is the equivalent of taking 345 divided by 18,000, we know that we could take 345, the max profit on the trade, and divide it by this new, margin requirement of 2,000, which gives us a 17.25% return on capital. And that's basically what this is telling you right here. That thanks to this margin requirement, you get a really nice return on capital. So one, I could pull what's essentially a 17% return on capital in a week, which is insane. Like when we talk about ROR, we're really only normally looking for something that is about, 2 to 3% a week, and even that's a little bit aggressive. But when we're able to take advantage of these more relaxed margin requirements and take advantage of the inflated premiums when we have a stock that's about to report earnings, we're able to get some really incredible returns. And I mean, 17.3% in a week, that is absurd. And the fact that we would get that just as long as Etsy doesn't drop 10% next week. So I love our odds on that one. Going back to the profit tracker that we were referencing, Zillow is almost an identical situation. We could see that we sold 120 strike puts. Let's take a look at that one. Put in the big Z. And there we have it, 120 strike puts, as you can see by the shading. Those are super far out of the money right now. It's trading at 130. So again, it would take a 10% drop to get us down to 120. We on the chart. It seems like 120, we got a area of support here, area of support in the mid 120s, area of support mid 120s. So I think 120 is a good price to sell this at. You've got a spike that was at 120. So 120 should be a decent battleground if Zillow does decide to go down. And again, they could beat earnings, shoot back up to $200 for all I care, and this will be a walk in the park. A lot of these situations that we're talking about in these scenarios will only arise if shit kind of hits the fan, so to speak, and we're worried about the stock dropping. But one, again, it would need to drop over 10% for us to lose any money. 120 is our max profit, and we sold it for $3 a premium. So that means 117 is our break-even price. So it is, you can lose, obviously. You definitely can lose, but we're putting ourselves in a position where we've got some awesome potential returns. And quite frankly, there's some pretty high probability trades. I mean, just talking about Zillow in general, I think real estate is kind of the next area to go digital. Finance is one of those things that's kind of taken the step digital. A lot of people are using online banks. But you're seeing similar trends in the real estate industry when people are selling their homes. They're foregoing the option to use a realtor and instead going to websites like Zillow, going to websites like Open Door. And it's kind of a quick, more convenient one-stop shop for people. And you're getting a decent price because, they're cross-referencing prices you're getting all over the nation. So you're not getting,
done over by someone, so people feel comfortable with that. And I think this is the next place where we're going to see some really solid numbers. They reported good revenue last year, and I expect good numbers going forward based off that thesis. But again, even if I'm wrong and it drops 10%, we're still going to make some money on this one, which is what we love. Again, just about 310, we'll call that halfway between there. So 310 of premium divided by 120. We're going to pull up the calculator again. So 3.1 divided by 120. Normally that's a 2.58% ROR. And again, great number. 2.58% weekly returns, awesome. But when we pop this open, put this number down to 1, and we see what collateral is required for one put, it only requires 1588 of collateral. So if we flip over to the calculator here, and we know that we can make $315 per contract on something that only requires 1588 of collateral, that's a 19.8% return in 1 week. Like, the value proposition that this leverage gives you, along with the downside protection to where, it could drop all the way to 117 and we're not really losing any money here. I mean, if it drops down to 110, we're in a little bit of hot water, but we could still roll these puts over to the next week and hopefully get ourselves out of there for a decent break-even price. But that is why I'm so fired up about this week. I'm fired up about earnings season and loving the flexibility. I think if you have a decent, you don't even need too crazy of an account balance. Just don't go all in on a leveraged position like this. I've got this as a relatively small percentage of my account. I think the total collateral I stuck on this trade is, about 10% of my account. So obviously we don't want to load ourselves up with these leveraged positions. But if you want to allocate a few different, a few smaller chunks of your portfolio to a few different leveraged positions, I think that's a good, safe, educated way to go about doing that. And that is what we are doing ourselves. So that's why we're fired up about Zillow. We're fired up about Etsy. The other thing that I wanted to talk about here that we didn't talk about in our recap because it's a new play for this week is Twitter May 7th 55 strike puts. So let's take a look at that one. TWTR. They had, I think, grab a huge red candle. And, again, one of these things where we take a look at the chart, where do we think the drop is going to stop? And we see some resistance here in this 55 level. Back in December of last year, it traded around there for a while. So I'd imagine that, even though this is a pretty big drop from almost 70 down to 55, we're going to see a little bit of chop in this area. And that's all we need because since we sold 55 strike puts, all we need is for the stock to stay above 55 and we'll hit max profit of what was just under $1,000. But from here on out will be about $1,400 if you were going to jump in on this one and sell some 55 strike puts along with this. You'll get a much better premium since when we opened this on Friday, it dropped even further from the point when we opened it. So again, one of those things where temporarily looking at this, we've got a little bit of a loss on paper, 475, but what we know as option sellers is as long as it stays above 55, stays right where it's at, we're going to have max profit here, which will take us from what would have been a 430 loss down to what will turn out to be a 950 gain for us this week. So that's something we're looking forward to. I think there's really solid value there. And again, this is another name where you could sell a 55 strike put, where normally we know that we would need to buy 100 shares of that. That would take $5,500 in collateral. All we need for this one is $1,000. So you're getting a really nice return on capital percentage, 12.82% on something that should be a little less risky because, they're past earnings. I think they're going to stall out a little bit in the 55 area. I mean, we could be totally wrong and be chasing this thing for months and months on end, but, decent tech stock, I think, in my opinion, and one that I'm happy to use these more relaxed leverage requirements to generate a nice return on capital percentage moving forward. And that kind of rounds out everything that I am headed into next week and what I wanted to talk about on my side. I know we had a couple stock requests from J Marts in the chat. And again, love having you in here, J Marts. Very, very, very loyal viewer. We love it. But you wanted to see MT or ZIM. You said you're bullish on both. So let's pull those up on our Thinkorswim platform and take a peek. And if anyone else has stocks you want to look at, more than happy to pop them in there. We'll take a look at, 2, 3, 4, 5, whatever people are throwing in there. We're about to hit the hour mark, so hopefully wrapping it up after this. But MIT, Mason Industrial, what's the first thing we do when we have no idea what a stock is? We hop over to the Analyze tab,
It's going to tell us what it is if we go back and type in MIT. That thing is loading for us, and there we go. Mason Industrial Technology Inc. Mason Industrial Technology is a blank check company. J March, did you give us a SPAC? Did you give us a SPAC? I think he did. The company is formed for the purpose of affecting a merger, capital stock exchange, blah, 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 blah. Long story short, it is a SPAC. So hopping over to the chart, it looks like, what's going on with this one? It looks like maybe it started back in March and it's traded right around this net asset value for a long time. No options on it, but we like to see stocks with options because, as we mentioned earlier, that gives us our cushion, that gives us our edge, that gives us our advantage when we trade. But I have no idea what they do. I don't know who they're targeting. If you know anything, feel free to drop that in the chat and give us a little bit more context for this position. It doesn't look like the Newswire gives us too much information here. But, that concept of net asset value with the SPAC is that, hey, in the short term, or at least until there's a deal announced, you're not going to see too much downside from here. So even if this was one you wanted to be long on, and again, I say this without knowing really anything about this stock, and volume is super, super low. I mean, there were only, looks like 5,800 shares traded on Friday. So I'm not even sure how you heard about this one. Okay, MT is the ticker. I'm the idiot. This makes so much more sense. Funny you say that. Let me, did I read that wrong? I totally read that wrong. It's ZIM and MT. Okay. So, J March, I thought you had some sneaky stock that you were trying to give us a little bit of a tip on there, but I am the idiot and misread the fact that you wanted to take a look at MT. So, taking out the I in the middle there, MT are middle. I'm probably making a fool of myself trying to pronounce this word. middle, doubling down on that pronunciation. ADR, which means it's not traded in the U.S., as we can see, based out of Luxembourg right there. The company, together with its subsidiaries, owns and operates steel manufacturing and mining facilities in Europe, North America, and South America, all over the place, basically. So what's interesting here is, steel company, as you can see on the little chart preview they give you, it looks like it's been a little bit of a roller coaster. But we talk so much about observing macro trends in the market and using that information to form our trades and keeping things like that in the back of our mind when we're opening trades. And I think one thing to think about is potential inflation that could be coming down the road at some point soon. And what's a good place to have your money in when inflation hits? The answer is commodities. Steel is a commodity, so it would fit the bill. Personally, I'm looking to try to get into some more commodity-based stocks. A little bit of a side note here, FCX is one I've had my eye on because I think copper is a great place to be. I'm waiting patiently for a pullback. If it never comes, it never comes. But if we get one down to this, low to mid 30s level, I'm about to be all over that. But getting back to MIT and taking a look at the chart, this is kind of typical with what we've seen with a lot of commodity charts. It's tripled in the last 180 days, which is something where, hey, that gives me a little pause because what's happened in the last 180 days that justifies a 3x valuation on this thing, and are we chasing at the top here? I think maybe, definitely. However, we love looking at RSI, Relative Strength Index. Anything above 50 means it's overbought. Anything below 50 means it's oversold. And this on the 180-day RSI, which is a pretty significant measure, it's down to 36, which would indicate this is a decent buying opportunity. Looks like it traded for most of April right around this $29 level, so not a bad place to get in. And there we go. We love to see it. It's got some options. Let's check the volume to see if people are actually trading these things. And, not like a ton of volume, but I think definitely enough to at least establish some sort of a position here. So you could get some decent return on capital numbers. Again, that would suggest to me this has a more relaxed margin requirement. We could take a peek for sure, because selling this one fully cash secure would take $2,900 of collateral. But yeah, only takes $500 of collateral. So love the fact that you could get a little bit of a leveraged position on this one. Just enough to maybe make a small position. 78 cents a premium would put you at a 28.30 break-even price for the week. If we zoom in on the 5-day to get a little bit more context, that would be below the chart. We got to zoom out here. this is where your break-even price would be. Max profit, again, would be at the strike that you sell, that 29 strike put. So, I mean, maybe not the worst thing to be. It's come down off 31.50s where it peaked on April 26th. A decent entry according to the RSI. And you can get some decent premium on a week-to-week basis. Honestly, I don't hate this one at all, but I will say I think this is one where it's important to use that, position sizing methodology that we like to talk about with the HT wheel strategy, which is, hey, maybe only open 30, 40, 50% of what you're comfortable with off the bat in case this thing keeps dropping on you. And then you could average down as it drops further and further. But I emphasize that because of this 180-day chart. You don't want to go all in on the position that you were planning on opening right here, have it drop to 25 and say, okay, shoot, what do I do now? But rather, if it drops to 25, then you could say, hey, I've got 50, 60, 70% more capital I could throw in this, and I'll have a much better break-even price than even if I were to purchase the stock today at 29.29, or if I were to go all in on those 29 puts with 28, 30 break-even price. So I think the wisdom there is to slowly scale into this one as opposed to jumping in right here, because potentially could see some downside of commodities take a pullback. We've got J Marts letting us know in the Twitch chat that steel futures are at an all-time high and extended until next year. So, hey, I mean, nothing wrong with steel. I think steel is a great place to be. Just be mindful of any sort of downside potential with this kind of chart shape. I think this is one that we've seen a lot and people could tend to get burned by, but I think it's a great combination of one, premium, two, the fact that you can get leverage to get a nice ROC percentage, and a decent place to have your money parked when considering macro market trends. So that's my spiel on MT right there, and we're going to jump right into the second suggestion that J-Marts had, which was ZIM. He mentioned he is also bullish on that, so if J-Marts is bullish, then I'm bullish. We don't even need to look at this thing. I would trust his word. But, since you guys might be a little curious, I guess we'll take a look. The company, it's a holding company, and together with its subsidiaries, they own and operate steel manufacturing. This is still MT. Okay, I was like, this looks a little bit familiar, but yeah, okay. ZIM Integrated Shipping Services is an Israel-based company. It operates as fleet and a network of shipping lines offering cargo transportation services on all major global trade routes. Again, J-Marts, if you know anything about this one, feel free to drop it in the chat, because this is also one that I've never heard of. But to the chart we go. And funny enough, this is almost identical to what we just looked at with MT. It was 1134, 180 days ago. And in fact, what was the number MT was? 1129. Okay, so it's 5 cents off. J-Marts is a big fan of the stocks that were trading at about 1130, 180 days ago. He loves to find these, I guess. But his run up to 30.5. RSI, as we saw on MT, this is a good place to compare. We're looking at the RSI down here. We know that anything above 50 is overbought, and anything above 70 is where it really starts to get overbought, and that's why it's indicated in red right here. And, we like to historically look at how RSI has been as a predictor of future performance for a lot of these things. But as you can see back here, last time it was red was, I think, April 26th right here, and there was that big red candle right after. Got into the red right here back on April the 9th, some more red candles after. Got into the red right around here. It stalled out a bit, but there were more red candles coming. All in all, the point here is that RSI, I think, is an awesome indicator of, what you could expect, at least in the short term, for the next few days or maybe few weeks about where a stock is going to be moving. So that's why we put so much stock into this when we see that, hey, it's at 71. I think this is one I would hold back, wait for it to cool off and test this, maybe 35 level, come back down here, and then you could get in. But let's keep going through with the process that we want to think through on the trade. Don't necessarily like the fact that it's only got monthly options, and there isn't a ton of volume for the monthly options. J-Marts is mentioning their IPO was back in January. That's a great point. This isn't 180 days. This is January 28th. So really, this is one that's only been open for, 3 months, February, March, April. So that is something also that's good to keep in mind. But again, one of those things where, hey, this IPO in January, it's been 3 months, and it is almost quadrupled in price. What gives? So I'd maybe be a little bit cautious. We want to look at this probably from an ROR perspective to see what you could actually realistically expect. And I just don't think the premium is as good as you would need it to be for something that's 3 weeks away, especially on a chart that looks like this. You could sell 35 strike puts, but it wasn't until April 27th that this thing was above 35. This thing had spent pretty much all 3 of those months post IPO back below 35. So you only getting a 5.26% return for 3 more weeks of waiting at that price level really doesn't seem like that great of a value proposition to me. So I think from an option selling perspective, I would hold off on this one between MT and ZIM. I think MT is a much better option, better entry point. I think ZIM might be a good one to just keep on the watch list. Keep an eye on it. If you see it has a big red there, pulls back into this area, that's the time to strike. Keep that money on the side and be waiting and ready to get all over it. So that is hopefully answers some questions and gives a little bit of analysis for the 2 that we talked about for J-Marts. And then we got C4 Turtle in the YouTube chat. I said he was tuning in for the first time tonight. Hopefully we haven't bored you too much with what we've got going on here, but we want to take a look at AHT, which, wow, has gone from 127 up to 620. We're going to look at this. It does have options, which we love to see because I feel like so often you find companies like this that just don't have options. And what's interesting about this one, which is probably why he is curious about it and has heard about it, is because in the last 5 days, as you can see, this thing has gone from, $191 up to almost $3 a share, which is some crazy price movement, and thus reflected in the option premium that you could see. There's an absurd amount of volume on the calls that you could see here. There were 15,000 calls traded at a 5 strike, which again, you got to zoom out on the y-axis because it's all the way up here and represents almost a 100% return from where it closed on Friday. So that's some pretty optimistic option purchasing. But again, while option volume can be interesting to look at sometimes, I think it's important to emphasize that you have no idea why someone opened an option trade. You have no idea why someone bought an option. You don't know why they sold an option without knowing what's in their entire portfolio. So big trades like this can be a little bit misleading when trying to evaluate future performance of a stock. But with this in mind, I think, 2.5 strike call, this could almost be exactly like what we did with STON, right? Remember, on STON, we entered at 270. This is at 274. We sold a 2.5 strike call for 60 cents. These are right in between those, which meant that we had a 210 break-even price, which is right around here, and in the scope of what it's been doing for the last one. Not a terrible place to be. And it's above 250. So as long as it traded flat or went up from here or just didn't drop 24 cents, you're hitting, a really nice return. And we could pull that calculator back up to illustrate just how nice that return is, because, you've got a 2.10 basis on it, right? And you're going to get it called away for a 40 cent per share gain. Essentially, you're getting a 210 basis called away for 250. That's a 40 cent per share gain divided by the 210 basis. And you put yourself in a situation where, hey, as long as this thing stays flat, or it could go up, or as long as it just doesn't drop 24 cents on you in the next 3 weeks, guess what? You're going to make a 20% return. And additionally, your break-even price is now at 210 because the 270 strike price minus the 60 cents premium puts you at 210, which is a 64 cent drop off the current price of 274, meaning that as long as the stock itself doesn't drop 23%, guess what? You're going to make money on it. And that's why we love, we try to stay away from chasing premium with our entire account, but situations like this are where it looks so interesting. So that is a play that we think might be pretty interesting if you wanted to go with the in the money covered call. But effectively, I think selling a cash secured put would be really, really similar because the break even price here would be about 210. Break even price here would be about 210. Kind of pick your poison. The benefit with the covered call, though, is that if this thing runs up to $5 a share, someone might exercise the covered call and you'll hit max profit early. If it runs up to $5 a share and you sold a cash secured put, no one's going to exercise anything early. You're going to have to wait until expiration. So the benefit to covered calls in the money as opposed to cash secured puts on potential high flyers like this one is the fact that someone could exercise those calls and you hit your max profit a little bit earlier. That frees up more money to put into another play that you would have otherwise had it tied up over here in these cash secured puts. And then the last stock we will talk about today. What's up, Sierra? Welcome to the stream. Glad to see you in the chat. She said it's been 2 months or more and we need to check out CLSK again. Absolutely. Sierra as well has been asking for a music channel in the Discord that I have completely blown off because I told her I would do it the next time I was on my computer. Right now, I am on my computer, so we may just make the music channel in the Discord server live on the stream just for you, Sierra, because you've been so patient and not bothered me too much about it. But looking at CleanSpark again, I think if I remember, this was one of those green energy type companies. Intelligent energy services. They offer software and intelligent controls from microgrid. Yep. Green energy type stock. Was at 6.2 back in October, ran up to 43, which, as we talked about earlier with some of these, hey, you know, this thing's 3x, it's 4x in the last 180 days. Be careful. This is why we say that, because as you can see, when this thing ran from 7 to 43, it was only a matter of time before it came falling back down. And between the peak of 43, which was only back in January, and now it's down to 21.7. It looks like there might have been a decent entry point a couple weeks ago down to the 17 level. But it does look like it's starting to consolidate at least between, you know, 17 and 25 in this range, which I know is a pretty wide range to, you know, quote unquote consolidate in. But compared to the 7 to 43 movement, I think that's a little bit tighter of a range than what you might expect. So taking a look at what we could potentially sell to get in on this, a 20 strike put would give you an 8.1% return on risk. And with something this volatile, I can't imagine the return on capital is really that great, but I would be wrong, because you could get a 50% return on capital. It looks like a 20 strike put where it would normally require $2,000 of collateral. TD Ameritrade is only requiring $923 of collateral. So that's $140 a max profit divided by 923 at buying power. That doesn't seem like a 50% return on capital. It looks more like it looks more like double whatever this is, because the margin requirement's half. It looks more like a 15 or 16% return here. But, you know, either way, digressing away from my little leverage spiel about buying power, this probably isn't, based off the chart that we looked at, the worst way to get in on it. If you've got shares, there's a lot of premium for the calls, and that's something where with this kind of volatility over the last 180 days, you could expect that premium to stay in the call. So even if you are assigned on the shares, which if you were assigned, you'd be assigned at a 1850 basis, because that's the strike of 20 minus $1.50 of premium. So you'd be at an 1850 basis, which in the context of the chart, let's take a look at the 20-day. That's right about here, which, you know, it did dip to 16.3 back on April 20th. But being right here maybe wouldn't be the worst thing in the world if you could pull another $1 or $2 of premium for the June series of calls that you would subsequently sell if assigned, and that would get you right around here at 1650. I think is where you presumably or conceivably could have that basis 3 weeks from now. But what I notice so often as we play a lot of these names that are quote unquote premium chasing with monthly option expiries, one of the issues I run into is, 4 weeks, 3 weeks out from expiry, there isn't a whole lot of decay in these options. It really isn't until, 2 weeks before expiry and the week of expiry that we start to see these get going. So I would maybe, if you're looking to initiate a position on this, hold off a bit and wait a week so that you could really capture as much theta decay as possible on this. And you might even get a better price on it. Who knows? It could go up, it could go down. If I knew the answer to that for stocks, I would not be streaming with you tonight because I would be living on a private island somewhere. Fact of the matter is, no one knows which way a stock is going to go. If they did, they sure as shit would not be telling you. They would be making money for themselves. But that's why we use the strategies that we use, because, hey, if we think this one's going to go up, it goes up, we make max profit. But if it goes down and we're wrong, we can still make money by it going down, just as long as it doesn't go down too much. So I think maybe that's the conclusion I've come to on this one. Maybe not, not a bad stock long term. I like that clean energy space. This does scare me a bit on the downside. So I think maybe personally I'd set a price alert in the 13 to 15 range, which might be a little bit conservative. But that's not to scare you away, if you have a stock position or a long position, because that month-to-month call premium is really nice. We could spike back up to 40 just as easily as we could pull back down, to 13 or 15. But one of those things where when a chart looks like this, I like to be as cautious as possible. A premium looks good, and it'll look even better probably if it, tanks to this 13 to 15 range. But that's where I would look to get in on it. If you're already in on it, you're going to be just fine unless, you got in up here, in which case, whoops. But, Yeah, not a terrible entry here. RSI is dead in the middle. If you want to sell a 20 put, I think let it rip 8.11%. I prefer to hold off, but we've got a question from Handpay Harry about what Jmart's account is worth. Jmart's, I have no idea what Jmart's account is worth, but the guy's a great trader. He's part of we've got profit clubs in our Discord server, and Jmart's is a proud member of at least the $1,000 club. Jmart's, correct me if you're in the $10,000 club as well, but those profit clubs correspond to the amount of profit you've made since you joined our Discord server. We've got $1,000 profit clubs, we've got $10,000 profit clubs, 50K clubs, and then at the top we've got the 100K club, which we have a few members of our Discord server who've made 6 figures using our trading strategies. So let me we could talk a little bit about the Discord too. Let me pop back into it. I think this is where I want to be. So this is our server for any of you who are watching along with us tonight who aren't already a part of it. This is, while we talk, once or twice a week via stream, I feel like I pretty much supply a stream of consciousness through this Discord server. We've got all the trades that I make listed out here. I try to put my justification for entering these trades, these ones that we've talked about tonight. We've got Sierra and more for keeping me honest that Jmart's is in the 10K club. We flip over here, and he's offline, so we can't see his name right here. But he's in it. He is in it. So Jmart's has done an awesome job with our strategies. So we are always happy to see him in the chat, and anything that he suggests, I'm always perfectly happy to look at. But yeah, I think that should sum up everything we wanted to talk about tonight. I might go into the off-topic section and add a music channel because Sierra said that More4 would that would be the only thing that would make More4 share some songs that he likes to listen to, and we all like to hear what More4 is listening to because he's probably the most important person that we've got in our chat room. So, if that's true, More4, if the rumor that us making a music channel would get you to, share some of the tunes you've got going when you're making your tens of thousands of dollars every week, let me know and we can get that thing added. But we're just over the hour mark, hour 15 on the stream. We've recapped what we had last week. We've talked about what we had coming up the next week. And we have talked about a couple different stocks from the chat. Again, always love having people in the chat to throw some stocks at me to take a look at because it helps me to take a look at new stocks and open up my mind to some new potential trades. And I hope it is equally helpful to you guys to explore some different things because I know a lot of the time the trades that we run on a week-to-week basis can get a little bit repetitive. So it's nice to get some new blood in the mix when we take a look at some different potential plays. But that is where we are going to end this thing tonight. If you guys have tuned in and stuck with us the whole hour 15, we really appreciate it. Hopefully you'll be back with us next week. And maybe if we've got time, Tuesday, Wednesday, maybe Thursday night, we could pop on a midweek stream if there's enough interest to talk about how the week had started off and how we plan to approach the back end of the week. But once again, thank you so much if you've tuned in tonight and spent some of your Sunday night with us. And we will sign it off the way we always sign off on our streams and on our videos by saying that this has been the Hourglass Trader, where as time passes, we make money. Thank you guys so much. We'll see you on the next one.